The Federal Reserve has been instrumental in the manipulation of our current economic situation, printing fiat currency and handing it to financial institutions all over the world. Besides the limited audit, we are unaware of the functions of the Fed, unable to determine their policies, and essentially in the dark about their operations. It has been very clear that the Fed has been highly active in their support of financial institutions in September and October, far greater than during the financial crisis. You came here for the truth, so let me unveil that for you. I'm going to show you 13 different charts that prove the financial crisis is on right now. I want to move into the most important news of this video right away. This was actually brought to me by two of my viewers, and just wanted to show you this. Reverse repurchase agreements held by the Federal Reserve. Now, this is a little complicated, but I'll break it down to the simplest form. That's what the Money GPS is all about. We're looking at the St. Louis Fed, their own website, looking at this data. And if you look during the financial crisis, you'll see a very large spike upwards in this reverse repo. Now, that was a dramatic spike. It obviously was something that hadn't been done prior to that. And if we were to zoom in on that, you would see that it looks quite dramatic. Compared to what we have now, though, since 2014, it's absolutely nothing. Looks like a little blip on the screen. The market has been highly active in this for the reverse repos, essentially giving liquidity for collateral in a way to select financial institutions, but truthfully, we don't really know where that money is going. So, what has happened here within September and October in particular, and even before that, basically since the beginning of 2014, is that the Federal Reserve has been extremely active in this. And I believe that the real money has begun to pull out of the banking system. We are experiencing a real deflation at this time, and this will in fact have the Federal Reserve, have all the central banks around the world decreasing their interest rates and then engaging in quantitative easing, the likes of which we have never seen. That is a hyperinflation globally. Now, the budget deal, pretty funny actually. We see this all the time where they say, look, we need to raise the debt ceiling, and let me take a guess, I think they're going to raise it again. Congressional leaders and the White House reached a major deal Monday to avoid a potential fiscal calamity. That's right. It's always such a disaster every time, even though they know exactly what's going to happen. The agreement, which would raise domestic and defense spending by $80 billion and lift the borrowing limit until March 2017, could be voted on by the House as soon as Wednesday. So right here, they want to avoid that whole election process, get the debt ceiling to be raised, and you will have no problems whatsoever. Now, why are they increasing this so-called defense spending? That's war, just so you know. The word defense is actually the word war. And what they do with this is, in fact, give guns, give bombs over to Al-Qaeda, over to ISIS, over to the Mujahideen, or whatever you want to call them, rebel fighters. That's what they are. Oops, I mentioned that. 2-year and 10-year Treasury note yields. Look at the decline that we've seen. Interest rates are on a decline. This is going to show you that times have really changed over these past few decades. They're running out of options here because they're essentially at zero at this time, and you can bring them into the negative, as we have seen with countries like Germany offering negative on some of their debt so-called instruments, and it doesn't really look pretty for the future if this has to continue like this. Let's move on to this 9 different charts. I'll touch on a couple of these here. Student loans becoming a very big problem, particularly since, let's say, the mid-90s, and they have really skyrocketed after the financial crisis. Why? Because people are poor. People can't afford it. So they take out a student loan, and this has become one of the biggest bubbles in history. Food stamps. You can see their incredible rise, particularly since the year 2000, where it has started an uptrend and has begun to taper to some degree, but really hasn't stopped at all, and it's going to continue. The only reason that we did see a little bit of a taper was that they cut back the funding on it. Federal debt obviously increasing. It's a joke. Money printing, we have an extreme case of that, and they don't even report all the amount of money that they print. I don't know how that's legal. Health insurance costs with Obamacare obviously increasing, really being a very huge burden, in fact, on the people, even though they were promised that it wouldn't go up a cent. Labor force participation rate. This is one way that you can actually see the true unemployment rate, or how many people are currently employed. It's going down significantly these days, and it's just a reality. Don't look at the unemployment rate, look at the actual employment rate. Workers share the economy. Look at the median family income declining year over year. Think about where we were at in, for example, 1970 compared to now. Same with home ownership declining at a rapid pace. These are straight lines. These are things you can't deny. It's not little blips. We're talking about decades at a time where we have trends forming, nothing that can be avoided or overlooked. In my book, I talked about the reserve currency. I have a whole chapter on that. But I wanted to quote here Hayek, where he said, "Practically all governments of history have used their exclusive power to issue money to defraud and plunder the people." It's happening right now. And it's pretty clear, it's pretty obvious, because they keep racking up the debt. And what do? Well, we simply have to take it. Well, we can invest in real assets to minimize that damage. But the currency itself, if you work a 9-to-5 job, that is being destroyed every single day. So it's important to take that and potentially, if you have any savings, to use those savings appropriately, not spending them on liabilities, but purchasing assets. Let's move on to this here, where we look at the rolling 20-year rates of real returns. What I want to note from this is the CAPE valuations, and we need to understand that the PE ratios show that we are, in fact, overvalued right now. You need to understand that this only happened a couple times throughout history, always ending badly. So what does that tell you about the future prospects of the current market? Interest rates reflect economic growth and inflation. Where are they going to go? They're already so far down in many ways. Robert E. Prechter, in his book At the Crest of the Tidal Wave, talks about how we have certainly been peaked out based on the Kondratiev wave or the long wave, Elliott wave theories, and you could see that we have definitely peaked out and that we are headed for a long-term decline. That doesn't mean that they can't be raised temporarily with the stock markets, but it's a long-term decline. That means less ups and more downs. This right here just showing you various things. The black line here is the interest rates. When you get down to a certain level, where do you go? How much further can you go? Well, certainly you can go into the negative, but that does not last long. Even the 0% interest rates has gone on far too long, and the distortions have really made their way throughout the economy, not just in the US, but it's a globalized world, remember. One of the last things that I wanted to cover out of Reuters, rising vacancy rates and plummeting rents are increasingly common in Chinese malls and department stores, despite official data showing a sharp rebound in retail sales. Blah, blah, blah. What I would like to say about this is basically that China is feeling the same things that they're feeling in the US, that they're feeling in Europe. Why? Well, simply because it's globalization. You can't have China running as its own ecosystem when it exports so much, when it requires imports of so much that other countries are always being affected by other countries. You can't have your own way these days. They've set it up so that China is the factory of the world. They need to do their shipping. But look at the various indicators with the Baltic Dry Index as an example. These show a decline of the global economy. Yes, it's a global economic collapse. We know this because of things like this article here out of the Los Angeles Times. In a hurting economy, selling plasma, that's blood plasma, is part of their financial lifeblood. People are selling everything. I was reading an article earlier about this, and they're basically giving up all their different body parts and fluids and this and that in order to break even. They're trying to live. They're trying to live their life. Most of these people don't live above their means, although certainly some do, but they're finding it harder and harder to scrape by. That's it for this video. If you found it informative, please give me a thumbs up. I was definitely on a roll here, just giving you fact after fact after fact. I hope you appreciate that the Money GPS is different in many ways than the other alternative news, and definitely different than the mainstream media. I'm here to give you the facts. I'm trying to be as much of an open book as possible. I take a large amount of information, spend a few hours on it, condense it down, try to give you the most simple videos that I can, things that you can really get in a short period of time. Take that information and then, do your own research with that. I give you all of the sources every single time in the description of the videos. So if you ever want to click on one of the links that I'm looking at here, just go to the description of the videos, and that's all you need to do. Check those links out. If you found this video informative, I know you'll find my book, The Money GPS, even more informative. If you go over to Amazon, they have this look inside feature. It allows you to flip through the book and see if you like it. Take care.